Hi everyone, hope you're all doing well. Today got a Sunday video for you guys. We're going to take a look at Adobe stock because it's had a pretty tough week. If we look at Adobe stock, the stock is down 10%, and year to date Adobe stock is down 10% as well. So it's actually underperforming the S&P 500 at the moment. And if we zoom out, it's actually not been an amazing time for Adobe stock. It's only up 17% in the last 5 years, which 17%, okay, I guess it's okay, but you know, at that sort of level, you might as well have just put the money into something like the S&P 500, and there's plenty of other stocks that would have outperformed it in that time frame. So it could be worse, but you wouldn't be that happy if you did invest into Adobe stock. Now, if you look at where the stock was 5 years ago, we're actually getting quite close to the CV lows, and if we actually look since that time frame, the stock's only up around about 23%, somewhere in that sort of range during that time period. So it's not even performed that well, even if you got towards the bottom of this CV drop. So if you look right now, really, it's been a very volatile chart when you look at Adobe. The last time we hit a high was around $634, and that was actually about a year ago. Since then, the stock is down about 37%, and then I think the all-time high was $616 on the 3rd of December. Last time I covered Adobe stock, I think it was around about $500-ish. So yeah, since then the stock has fallen quite a bit. So I'm going to give you my updated thoughts with Adobe stock. And I think it's actually going to be maybe quite surprising, I think, overall. But my last thoughts on Adobe stock is that it was just a little bit it was still a bit too expensive for me. And for me, it's not a buy. But obviously, since that time frame, the financials have continued to improve and the stock has continued to go lower. So is this now a better value for Adobe stock? Let's take a look. So overall, because of the drop right now, Adobe is actually 19 forward times earnings, which isn't that bad. You know, when we look at the market average for a company, an average valuation for a company growing like 5-6% that has a decent balance sheet, a decent moat, you would say is probably around about 20 times earnings. That's the S&P's normal valuation as well. Adobe is about the S&P's normal valuation now on a forward basis, which isn't too bad. And also you got to consider Adobe is probably a better company than the average S&P company because it's got probably a better profit margins, better business model, decent balance sheet, above market growth. So it's probably better than the average company as well. And historically, if we look at what Adobe has normally traded at, in the last 5 years, it's normally traded at 43 times earnings. So it's historically below what it normally trades at on a forward P if it grows into those figures. Now, what I will say here is that I do believe 43 times earnings is a little bit rich for this company. We'll talk about that a little bit more in upcoming, but just to kind of put into context of where it's normally at. Now, Adobe, obviously the platform itself, fantastic platform. The products are amazing. I personally use the products for these videos on YouTube. I would say, in my opinion, one of the best around. I've used them for many years and people love them. And because people love them, bit of a moat there where it's kind of stickiness. Are you going to leave them? Are you going to try that new platform out there? And obviously they continue to improve. And obviously when you look at the reviews for some of these products are amazing. You know, look at the PC Magazine review for Adobe Photoshop, 5 stars, outstanding, editor's choice, and this is what a lot of these programs get. They get very high reviews out here. Now, obviously, the recent earnings, that's why the stock did drop on the latest drop. I've got to say, Adobe seems to be following the pattern at the moment where it seems like every single drop comes off earnings, and then people go, oh yeah, we're not happy with something, maybe the growth's a little bit slower than what we wanted. And then eventually people go, actually, it's Adobe though. And then they buy in the dip. So if you look at the stock chart, it's very volatile, as you can see here. But nearly every single drop that you'll see on this chart comes off some sort of earnings news. So for example there, that was once again earnings related. Sometimes some of these stocks do fall into patterns where you can kind of see where they're going. And Adobe at the moment seems stuck in the cycle where it drops off earnings. People not happy with maybe that it's not growing as fast at the moment, or they're not happy with the guidance. But then people buy in because they think, well, it's Adobe. So then they're buying. But looking at the first kind of couple of numbers here, the revenue growth of 10%. Now, a lot of companies wish they could grow at 10%. I think maybe the issue with Adobe is that we've kind of got used to higher growth in this. And I think this was what sometimes the market's trying to adjust to. And this is what my argument would be when you look at that valuation. So you can see here, you had this negative growth period here what happened during that time is Adobe switched from a one-time purchase and then you would have to go to a subscription model. So you might have seen this with like some Microsoft Office, for example. What you'd used to be able to do is you used to be go out, and if you got a new computer, you'd just go do a one-time purchase and then you'd get Adobe Premiere on your platform or Microsoft Office on your platform. And Adobe changed that business model by switching to the SaaS model. And instead of paying this upfront high purchase fee of like, I don't know, $200, what would happen is then you would actually subscribe for $20 a month. Now, what happened in the short term is because you didn't have all these big purchases, we actually saw negative growth in Adobe. But what would happen is that you'd have that platform on your PC for the next 3-4 years and you'd get your money's worth from it. But whereas you're paying $20 a month, it would only take, a year, and then Adobe would actually be better off having the subscription model. So when there was the switching side of it, there was the negative growth, and then eventually they started getting the reward. And since then, Adobe's kind of started growing at 20% revenue growth per year for a good amount of years. Now, this is actually going back to 2019, and I actually pointed this out on a YouTube video in 2019, which was obviously quite a while ago now. But I said the only concern about Adobe now is that the growth rate actually seems to be slowing down a little bit. And we did start just before the CV situation, we actually did start to see the drop off in the revenue growth starting to come in, where it was like 22, 23%, and then it just started going into the 21%, 18% range. And then we ended up into 13% range. Now, you could argue the case that some of that was maybe the drop-off because of the CV situation. But the growth rates were starting to drop a little bit on Adobe. Now, what happened is it did start having the surge back up into the 20% range because, obviously, work at home, people getting it on more devices at home. People in general was doing more media content. A lot of people had free time, maybe starting off YouTube channels, for example. And they did kind of get back up into that 20% range. But now what's starting to happen is they've gone back to where I think they were naturally going to, which is around about a 10% growth figure. And it's been pretty much a 10% growth figure for like the last kind of couple of quarters, as you can see here at the moment. So I think Adobe has naturally gone into that 10% range. And I think that adjustment is going on at the moment, where for so many years you've kind of valued Adobe at like a 20% growth figure, and now you're adjusting down to a 10% growth figure. And I think that's why the stock chart is so choppy at the moment, because people are trying to value it in a different way to what they have done for like the last 5 years. And I think also when you come to a P ratio, I think that also factors in, because for the last 5 years, you've been valuing this company growing at 20% a year. There's a big difference between growing 20% a year down to 10% a year. That is a big metric compression. And like I said, I don't think we'll see the days where Adobe goes to 42 times earnings. I will say that I do think it trades at a premium, because 10% with the company that Adobe is definitely higher than a market average valuation of 20 times earnings. But I think that's what you've kind of got the volatility right now going on with Adobe at the moment. But 10% revenue growth a year, a company growing at that sort of level can still do very well. And also when you dig into Adobe, when we look at the growth rates, I think one of the concerns as well is around competition. Is it the natural slowing? Is it just kind of got to that scale of a company now where the growth rates do start to drop? But I also think there's also the concerns around other platforms coming in, like Figma. A lot of people compare, they actually tried to buy Figma until the deal was actually blocked. Is the, when you get to a certain size, you are more vulnerable to that competition, and is more competition going to come in and unsettle them a little bit? Maybe people would argue the case that they've just kind of got to the scale, but also is the competition risk. I think that's also something that you got to, put in here as well. But looking at the future growth, still looks like, next year, 2025, 10% revenue growth expected. Well, 9% the year after, 10% revenue growth expected. The other thing is the company is massively profitable, so they are buying back shares massively. So if you look around here, there was the shares outstanding has reduced by a good 10% in the last 10 years. If you look at since 2020, another good 5% of shares reduced as well. And actually on the latest earnings, they've increased the share buyback with the lower share price, which is what you want to see a company do, is be more aggressive on that share buyback front. Financial health-wise, one thing I don't like about Adobe is the balance sheet has started to get slightly worse. You can see here there's been about a 50% increase in the debt. I'm not a big fan of that, but they do have a pretty healthy cash balance at $7 billion, so they can pay that debt off. So not much of a risk financial-wise, but the balance sheet is just deteriorating slightly, which is worth pointing out. But they have insane profit margins. I mean, look at this. They're making around about $7 billion of profit a year, which is so good. With $7 billion of profit a year, they can pay that debt off basically after 12 months. That gives them the ability to throw something into more aggressive share buybacks. So if the company feels like right now the company has gone undervalued, they can throw more into share buyback and buy back those shares aggressive. So you will get rewarded as a shareholder, which is obviously great to see. Now, the other thing as well is when we look at the company, the P is moving quite a bit, because if you look here right now, it's 26, but as I showed you earlier, it's actually 19 times forward earnings. So it's very important, especially with Adobe, to start looking at future figures, because if you look at the last year's figures, they did have the acquisition termination fee. That's because, like I said earlier, they were going to go buy a competitor, Figma. The deal got blocked and they had to go out and pay Figma compensation fee, which you can see here. So actually, the operating income, that's why it's you also want to be looking at non-GAAP numbers, which on non-GAAP numbers, they're still growing profit at 10%, but also on a forward P, you actually get roughly what it is actually at without this this termination fee here. So that's really important to look at. The other thing that's going around Adobe is AI. If you actually go listen to the recent conference call, a lot of the conference call was focused on AI, and you can see here, like, they talk about that they're getting 125 million now from the Firefly app from AI. Obviously, still a relatively slow amount, a low amount, but still something that is growing in the background. They talk about it like the PFD, and that has grown over 10 times year over year. They talked about here that the Photoshop Gen AI monthly active users is growing at 35% as well, and this will be a key driver for them for the next 5 years. Are Adobe going to bring in the best-in-class AI products so people stay on their platform and start using AI in the platform? And the other thing would be, is there going to be other competitors that come in and are able to create an AI platform that is lower priced than Premiere Pro, or an AI platform that is as good as Premiere Pro? That's probably another risk that you've got to probably price in the next 5 years, is the AI side of it. Is there going to be other competitors that take a market share, or are Adobe going to be able to bring a best-in-class into the platform? I personally would back them to do it themselves, because they've got the profit to keep investing in to create the best-in-class AI product, but it's something to be aware of. You know, if someone does just as good for half the price, that could be another risk. And that's probably the thing that you're weighing up with Adobe at the moment, is just the competition side of it and AI competition going forward. That's probably the big thing that you're weighing up in the next kind of 5 years. What Adobe are doing though, and probably a significant sign that they still believe they are a genuine top of the class editing program, is they still have the ability to increase prices. The ability to increase prices says to me that, okay, they are pretty confident that people are going to stick with them, and also that the moat is kind of there. You know, there is a lot of increase in prices going on at the moment. So, for example, the Creative Cloud is going up at the moment. And for example, that's for me in the UK, is increasing to £9.98 to £14.99 a month. So with them sort of increases, maybe they're able to charge add-ons for these AI products. What we will see is probably more than likely the expansion in profit margins in Adobe. So if we have a look at the previous profit margins, for example, the profit margins have been relatively recently 29%, but we can see here it's just started to go up to 30% profit margins, and increased prices are probably going to increase those profit margins as well. So that's obviously something to price in when you're looking at evaluation for Adobe. So let's have a look at some numbers, because like I said, last time we looked at some numbers, Adobe was a $500 stock. Since then, it has fallen to $394, so quite a significant drop. Last time I said it wasn't a buy. Let's see what I think this time. So I have priced in a share buyback, because obviously they are going to be probably aggressively buying back shares. You can see here that I've priced in a little bit of a share buyback there of around about 6 billion. I'm going to change the revenue growth to 8, 9, 10% growth a year. Like I said, I think they're probably going to grow around that 10% a year mark. As the year gets on, as they get bigger, obviously it's going to be harder for them to grow. So that's why I've got some slower revenue growth going forward. I've kept on the high side 10% just in case that AI part of the business is able to keep up that growth towards the 10% range. Profit margin 30, 31, 32%. That includes some price increases and efficiencies, so the profit margin expands, which they've historically done as well. 20 times earnings, because I don't like assuming crazy multiples to start with, just because in case that's where the market goes at and goes, you know what, we're not putting you at an extreme multiple anymore. And looking at the numbers, low side, there's not really much upside. Mid side, not much upside. And high side, yeah, there's not much kind of going on there either. You'd be pretty disappointed with that return at the moment. So not much upside here. Now, I do think there'll be some multiple expansion going on from Adobe. Obviously, right now it trades at 29 times earnings. Historically, it's always been a bit higher. So if I was to assume, let's say it does put it to a 30 times earnings multiple. So there is plenty of upside there, and that's where I probably would expect it to be. You know, on the low side, 64%. On the high side, you got around 88%. Now, you guys know me, I like to invest for 100% return, and as you can see here, we're not getting 100% return in the next 5 years. So right now, yeah, this would not tick the box as something I would like to buy. But you can see it is getting a lot closer to that. So with Adobe, I think last time I talked about it, it was quite far off where I'd wanted it to probably drop to. I think last time I covered Adobe, I said like a 30% drop. Now we're getting there. We know we are getting a lot closer to where I would be more tempted to buy Adobe. I think realistically, I would like Adobe to maybe drop another 10-20%. So if we do assume a 10% drop in the share price, I am then starting to see decent multiple upside on Adobe, and we are starting to hit that 100% upside. So if Adobe was to drop another 10%, I would actually be very tempted just to put a starter position in Adobe, and then if the stock was to go up from there, I would then obviously get some share price return. If the stock was to go down from there, I'd actually probably then start buying a more aggressive because there'd be more upside in the stock. So if the stock was then to go down another 20%, now we're starting to get real upside, as you can see here. You know, we've got nice, even on the low numbers, we're getting that 100% return. If I don't put any multiple expansion in, let's just have a quick look on the upside. Yeah, even without any multiple expansion there, obviously not fantastic numbers there, but still enough to say, okay, that's okay to invest in. So yeah, when I look at Adobe, this is the closest I've been to being a buyer of Adobe for a very, very long time. Like I said, I think 10% is maybe 10% lower from where it is right now, would maybe be where I would build the starter position. 20% lower is where I go, okay, this is now starting to get really attractive, and I'd be a little bit more heavier buyer from there. And then you would end up with the case that anything under 330, which would actually be below the CV low. Oh no, it's not as low as the CV lows, but you would kind of be getting towards this time period, and you'd also be getting somewhere around this time period. Anything around that below that 330 range would be then, okay, this is actually really interesting now. So yeah, Adobe is, I'm not a buyer. I'm still not a buyer of Adobe, but it is actually getting quite close to where I could be tempted. Like I said, 10% maybe 10% lower, maybe be a start position in the stock. 20% lower is where I'd actually get really interested in it. So let's see what happens, because obviously with the drop in the S&P 500, we've already seen Adobe go negative 10% this year. If we have another 5% drop in the S&P 500, we might see it. If Adobe puts in another earnings that the market doesn't like and has another 10% drop, we might start getting there. So it's close. It's very, very close. This is now entering the, you know, on the watch list, and keep a close eye on it, because it's, yeah, it could get there. So Adobe for now is a lot closer from where I last covered it, where I think I said I needed like another 30% drop on Adobe to get interested. We're only around about 10-20% drop now away from where I'd be interested in Adobe. So keeping a close eye on it for now. So that's the video for an Adobe, guys. Hope you enjoyed it. Let me know what you think Adobe. Are you a buyer? Is there a certain price where you'd come and buy of Adobe? But yeah, thanks for watching, guys. See you in a bit.